Peter Schiff, a known gold bug and the CEO of Euro-Pacific Capital, joins us now on the sidelines of the New Orleans Investment Conference. You're also a speaker here. Peter, good to have you back on the show.
Well, it's great to be back on the show.
I'm excited to talk gold with you. You know, we met last year looking at the outlook for gold in 2016. You were bullish, and gold has had a great run. So how do you see it set up now?
Well, I think this is just a down payment on much larger returns to come. You know, when the year began, everybody was bearish on gold because everybody expected the Fed to hike rates, or not just hike once, but begin the much hyped and anticipated normalization process, right? Because rates had been at zero for many, many years, and finally the Fed was beginning to normalize rates. And what I was saying at the time was, A, I didn't believe it, and that even if the Fed raised rates, that it wouldn't matter because they could never deliver the rate hikes that were anticipated by the markets. And ultimately, we only got one hike, the one in December. Remember, early on, the Fed was hinting that we'd have 4 rate hikes this year. I said, not a chance. And here we are. We may only get one in December.
So you think we might see it in December?
Well, I still think the odds are no, even though the market says 70% yes. But the market has been convinced before that the Fed was going to hike rates. And then, you know, just like Lucy with the football, you know, she pulls it away from Charlie Brown. You know, I still think that it's mainly bluff. But even if the Fed does hike rates in December, I don't think they're going to do it again. I think that'll be the last hike of the cycle. And the next thing the Fed will do is reduce rates again. This time they won't stop at zero. I think they're going to go negative. And I think they're going to relaunch quantitative easing, QE4. I think it will be much bigger than QE3. It won't be any more effective, but what it will do is destroy the dollar. I think the dollar will surrender all those ill-gotten gains that were based on the anticipation of rate hikes that never materialized. It's not just buy the rumor, sell the fact. It's buy the rumor and then sell because the rumor wasn't true. And I think gold's going to take off. And I think next year is going to be an even bigger year for gold than was 2016.
And what about the Europe scenario? Everyone's almost waiting for Draghi to announce tightening. You know, just when we saw the rumor of it possibly happening in Europe, gold had a correction. What do you think will happen there?
Well, I don't think tightening is going to be bad for gold, whether it happens in Europe or Japan. I don't think it's happening in the United States, because even if they tighten, it's not enough. I think the inflationary forces that have already been unleashed are not going to be rebottled with small rate hikes. So even if central banks tighten, I think real interest rates are still going to be falling because I think the cost of living or the inflation rate will be rising faster than the tightening. And the only way to really hurt gold would be for central banks to become aggressive inflation fighters, to really get out in front of the curve and to raise interest rates substantially. And I don't see any of that happening.
How much gold are you allocating right now in a portfolio? What are you advising?
Well, I mean, you know, it depends on the individual, and people decide to hold whatever gold they feel is appropriate. I generally have recommended for people that when it comes to gold, they have maybe 5 to 10% of their portfolio in physical gold, and then they also can have a portion of their equity portfolio allocated to, you know, gold mining stocks. I mean, one of the mutual funds that I run, which is a value fund, we now have about 25% of the portfolio in gold stocks. And so it depends on, you know, on your objectives and, you know, relative value of gold stocks. Some of my funds don't have any gold stocks at all, but if I feel it's appropriate for a particular strategy. But I think right now, if you look at gold stocks, and of course this whole conference, you know, all the exhibitors pretty much are mining companies. And
which shows what a year they've had, really.
Well, but it's still, even though these companies, and a lot of these mining stocks have doubled, tripled, quadrupled or more this year, they're still very, very cheap because all they did is recover ground they never should have lost based on the anticipation of rate hikes that never materialized.
But when you see some, you know, up like 200%, does that not worry you and think, okay, there's a
not if they fell 90%.
Right.
I mean, they're still way down. And of course, I still believe the price of gold and the price of silver are going substantially higher. So the real value of these companies is far greater than what the market perceives.
You know, I don't like asking people to look into a crystal ball, but if you had to look at a price forecast for gold as we start off 2017, how do you see it starting off?
Well, I think it's going to start off on a strong note. I think kind of like this year started off strong, because I think even if the Fed hikes rates in December, we'll have a similar reaction that we had to the last December rate hike, which was, you know, maybe an initial decline, knee-jerk move down, but then a big relief rally in gold. And if the Fed doesn't deliver a rate hike because the economy is too weak, that's also bullish for gold. And also, I think that one of the reasons the Federal Reserve has been talking up the economy is because they want to help elect Hillary Clinton. They don't want to admit the economy is as weak as it is. But once the election is over, I think regardless of the outcome, they no longer really have to keep up the pretense. I think they really want more stimulus, but they don't want to send a signal to the voter that the economy needs the stimulus. They want to pretend that Obama solved all the problems, but the reality is he made the problems worse. But once the outcome of the election is known, I think the Fed could do really what it wants to do.
Are you looking forward to putting this election behind us? Like most of the sentiment is here.
I don't know. I mean, it's certainly entertaining, but it's difficult for any other news story to gain traction when every day it's what a woman came out against Donald Trump. But it's unfortunate that the election is not more about the actual issues of the economy and the complete failure of the Obama administration, and it's not even about the crimes committed by Hillary Clinton and her husband and all the cover-ups. I mean, this is real corruption. And everything that's wrong with government is personified by the Clintons. And that really should be the focus. The fact that Hillary is even the nominee shows you the state of the United States. But I'm more interested, though, obviously, in the outcome of this election, and so we will see.
We will see.
I don't think that Trump is as long a shot as is generally perceived, because the economy is terrible. The average voter knows it. The enthusiasm for Hillary is not there.
Right. So we might have a Brexit-type scenario.
We'll see, because everybody was enthusiastic about Barack Obama 8 years ago, and he let everybody down. His constituents, particularly African Americans, are much worse off today than they were 8 years ago. And so if Obama couldn't fix their problems, I doubt they think Hillary can. So I don't think her base is that enthusiastic or motivated, whereas I think the Trump base actually believes that Trump could make America great again. Maybe he can, maybe he can't. But the point is, his base believes it, and I think they're going to turn out. So we'll see, depending on the turnout.
I know you were backing, your vote was with Gary Johnson. I saw you at Freedom Fest.
Look, I've always been mainly voting Libertarian, and I live in Connecticut, which is, Hillary's going to win Connecticut with or without my vote, so I can kind of vote my conscience. And I think of the three, I'd vote Gary Johnson. Is he perfect? No. I'd rather vote for Ron Paul than Gary Johnson, But I think of my three choices, he would be number one, and then Trump would be number two, and then I don't even know. I might even go for Jill Stein over Hillary Clinton. Even though she's horrible, at least she's not a criminal. She just honestly, doesn't know anything. She's like Bernie Sanders, right? She's wrong, but she might not be a bad person. I just can't see handing all that power to somebody as corrupt as Hillary Clinton.
Well, we'll see in a few weeks. Peter Schiff, thanks so much for stopping by. And thank you for watching our coverage on the sidelines here of the New Orleans Investment Conference. We'll have more for you, so be sure to stay tuned to Kitco.com. Thanks for watching. Thanks, Peter.
Sure.
Always a pleasure.